What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. One full week after surgery, definitely feeling a little bit better. Not yet at 100%, but I will be joining back on the video quite soon. All right, let's talk about these markets. First things first, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. Don't YOLO your entire account to any one of my trades or your trades. Always use proper position sizing. Oh my gosh, we have so much to talk about today, team. The market has been crazy, right? The past couple days, there's this saying, and it's pretty much like, you know, they'll either scare you out or they'll wear you out. And I think we're in that phase of this market correction where people are being worn out. What I mean by that is pretty much today was like an inside day in the market. We were trading inside of yesterday's trading range, but it almost feels like when you look at these stats right here, it feels like the market declined again, when really we're trading right at levels we were at yesterday. So yeah, if your mental capital feels like more depleted, you know, that's definitely something to just think about, internalize. Like, not really much has changed from yesterday to today. We did get Microsoft's earnings today, so we're going to talk about that. And we got a dark index print that came in so elevated today at 47. So we're going to talk about that as well. These headline indices, S&P 500 down 1.22%. NASDAQ QQQ really got hit, down 2.32%. And what's so interesting about this market correction is if you've been trading the markets really for the past couple years, especially last year, you'll know these growth stocks and really the vast majority of stocks in the equity market, they've been correcting / crashing for a solid year now, really since last February. And what's so interesting is, like, you know, if you're an active trader, you talk to your index buddies, you know, for them, it's like, what are you talking about? The market's not going down at all. You know, what the heck? My indices are going up, you know, to all-time highs. Only now are traders that are long indices, or really investors that are long the indices, are feeling the market decline. So for a lot of investors, this feels like, oh my gosh, this market decline, this is brand new. The market's been going up for 2 years. Why is it going down now? When this, to me, as we see the NASDAQ lead to the downside, this to me seems more like a final flush of the market, where we're finally getting basically these 5 to 10 mega cap tech stocks that are all flushing as well. Because what's so interesting about the composition of these indices is these indices are dictated by 5 to 10 tech stocks. If they're in uptrends, the market's going up. You know, it's really tough to buck those 10 stocks. But if those 10 stocks are under pressure, you know, it's going to feel to someone that's investing in the indices as if the entire market is going down, and that's not really the case. As you can see, the Dow Jones was barely down today. It was only down 0.25%. We had some nice moves in energy, financials, etc. So let's talk about all these different areas of the market. You can see that in terms of the day's range, we really didn't close too poorly in terms of the range. Like S&P 500 closed in the upper half of the range. NASDAQ and ARK, they were the worst. They closed in the lower half of the range, but the Dow Jones closed towards the top. IWM also in the upper half. Volatility remains elevated. These VIX futures are still inverted. So we do have that tail risk that is still on the table. And I think that's really what we're experiencing today, where all it takes is like a little bit of a jolt, and suddenly like everyone's liquidating, everyone's getting pushed out of positions. And it's tough to, I guess the best way to describe it, picture this, like let's say you and your significant other, you know, you're just in a great point in your relationship, everything is going well. You know, you might say something that bothers your significant other, and even if you do something bad, they're probably going to let you slide. It's not really going to be that big of a deal, right? Same thing when the market is in a really good place and the trend is positive. You can have a market dip. It's no big deal. The dip gets bought and everyone moves on. Same thing if you're in a good spot in your relationship. Something bad happens, all is forgiven, whatever. You move on. Who cares? But in this market environment where the VIX is at, you know, a 30 handle, take a look at where the VIX is. This is basically like, you know, emotions are running high. You know, you're in like the mother of all arguments with your significant other. The relationship is on the rocks. At that moment, you could do something that's very small, very insignificant, and suddenly that's like the straw that breaks the camel's back in your relationship. Same thing with the markets. When the VIX is this elevated and investors are this much on their back foot, and it's the beginning of the year, everyone's like, oh my gosh, this is only January, like I'm not ready for this. This is where all it takes is the slightest little blip on the radar, and the market really just has like big reactions to things that otherwise would be pretty small. So that was a long-winded analogy. Let's push on here, but I think you get what I'm saying. So Finviz heat map, as I mentioned earlier, the indices are down so much because it's really this group of stocks up here that are correcting. So if you think about just like all the stocks in the market, there's been so many stocks that have been doing this for so long. Now it's the turn for some of these FANG stocks to start correcting, like Nvidia. Remember Nvidia was like unstoppable last year. Same thing with Tesla, Microsoft, all these names. So it's not really like this is anything new. But yeah, I think a lot of people are really acting as if like, how could this happen? How could stocks go down when stocks have been going down really for the past year? But yeah, you can see a lot of the darlings, they're still getting hit. Let's actually open up some of these charts of some of the darlings and we'll check them out. So let's look at Nvidia. This stock, now it's trading down to the 200-day moving average. Yesterday we almost touched down to this VPOC here, but with Nvidia down at the 200-day moving average, I would say like for everyone that thinks the market's going to crash, like you're kind of late on that call. Like Nvidia is already back down to earth. We're down almost 30% from the highs. Yeah, probably over 30% from those highs, a third off. So yeah, in terms of everything, like this has already had a big decline. And so that's Nvidia. Let's take a look at Tesla. This one, maybe it still has more room to go to the downside because you can see we haven't yet gone to that 200-day moving average. But yeah, Tesla as well, is this thing trading, at the highs? No, not really. And maybe it washes out and goes down to 800. And maybe that's the big decline. Apple, this one, same deal, actually trading pretty close to that 200-day moving average now. So maybe if things get really scary, this one goes down to the 200-day as well. But as you can see, we're already very close for a lot of these stocks. Okay, so Microsoft reported earnings after the bell. Let's talk very briefly about it. So Microsoft, this stock, same deal. I think a lot of these investors, they really sniffed out, the Fed has to move on rates. The Fed's getting a bit more hawkish. Hey, some of these growth stocks, they're probably going to decelerate. So yeah, Microsoft has been in a down sequence here. They reported earnings after the bell. You can see it's trading around the 200-day moving average. And the stock is down. They beat on their earnings. They beat on their sales. And you can see we are trading right around 274 in the after hours. And I know a lot of people are saying, like, how could the stock be down? Like, it beat on earnings and it beat on sales. There's a couple components here. So the first is pretty much Wall Street. It's like this big, it's almost like a rigged casino where the estimates that they give are always going to be super light. That way companies can just bunny hop over them. If you look at the stats, I think it's like 75% of stocks beat the estimates. So really all that matters is what were investors expecting into the report. You can't really rely on those expectations numbers. Also, another thing is it's not really as important what they did last quarter. What's most important is what are they guiding to on the next quarter? Because investors are buying, selling stocks based on what they think that stock can do for them in the future, not based on what it did in the past. And if we take a look here, we're going to go to this shortly, but Microsoft said they're going to provide forward-looking guidance on their quarterly earnings announcement, on their earnings conference call and webcast. I believe that's probably going on now already, but I have not seen anything come out yet as to what their guidance is. But again, back to what we were saying earlier, when the market's in this heightened state of fear, and the market pretty much sold off into the close, I think a lot of investors are in this mindset of like sell first, ask questions later. So the stock's down in the after hours. Other last point here is Microsoft's down about, I think this is like 4 or 5% in the after hours. That's a very normal reaction for a mega cap tech stock. That's not like, oh my gosh, what a big reaction. It's selling off in the after hours. They're pretty much, this happens all the time where you get a 5% move. 5% move is Not really that much. For all we know, Microsoft might open down 5%. And who knows, maybe throughout the day, some investors buy it and it closes down, 2%. 2% down day is really not that big of an adjustment for earnings. I think, a huge adjustment was what just happened with Netflix. This was insane, where Netflix went from, it was trading at 517 all the way to 366 over a matter of just a few days. So that's a really big event. And that is full justification for panicking on that. But this Microsoft, I think this one so far has gone basically the happy path. I see someone just posted on Twitter, Microsoft CFO said commercial bookings was significantly ahead of their expectations. So yeah, I think this Microsoft, it would be great if they just blew it out and all of a sudden everyone's just super pumped. But I don't really think this is anything to get too concerned with at the moment. I think we just got to see, what happens tomorrow when the market opens. And let's see here. What happened to my chart? My chart just disappeared. Oh, there it is. All right. So yeah, that is Microsoft. Okay, let's move on here. So let's go to our sectors and style factors. This might be a little bit of a longer video, but I'm just going to try to keep it pretty brief from here on out. So energy up 3.88%. Gold miners up 0.67%. I added a position in gold yesterday. Let's take a look at gold, and we'll also take a look at energy. So I saw some news today. This is related mostly to energy stocks. And the news was that a lot of these European nations, they're basically reopening from COVID. And there's this, I don't want to say rumor, this narrative that maybe this Omicron variant, maybe this is sort of the final variant, ends the pandemic, and we can actually have a real reopening. If that is the case, demand for energy is going to be up, and it takes a while to match that demand with supply. So we can see, that's just a pontification. This right here is the price action. So investors really were aggressively buying back these energy stocks that they sold as the market really just, went into a full-on liquidation. This Halliburton up 7%. BKR, Baker Hughes up as well. So these energy stocks, they're doing something a little bit different than the rest of the market. Now let's also take a look at gold, which I positioned in yesterday. Gold, not a crazy move by any means, but finished the day positive in a week tape. And I really like the way that this weekly chart is setting up. So yeah, we tagged the yearly value area high today. And who knows, I think if the market enters a more calm state in the next couple days, weeks, months, whatever it might be, I think gold could end up having a breakout. Yeah, those are really the only areas of strength in the market. And some financials were also strong, like American Express reported earnings yesterday. Nice reaction for AXP. This is the weekly chart. Let me go to the daily. Yeah, nice reaction, up 8.92% for this stock. All right, another thing I want to talk about. Boom, let's just keep it moving. In terms of my trades for today, let's go through that real quick. I did not really do much trading today. I was actually off the desk for a good part of the day. I did close out these Microsoft calls that I put on. This was really just a shot, thinking that Microsoft had some upside, whatever. I was able to take one target in these Microsoft calls, but I closed out the second half of them into the earnings report for a loser, because I was the original reason I took this, I was not trying to play it for earnings. So yeah, this was a test buy that did not end up working at the moment. See, I took that one off. That was the only trade that I did for today. So I wanted to make sure, hey, with the market this crazy, it's the day before Fed Wednesday. I don't really want to be adding or really taking off risk. All right, so let's talk about this. I gotta mention this. Oh my gosh. So there's a lot of good things to go through today. Let's pull this up. This was on my Twitter. So where is this? Okay, I posted it over here. So Jesse Felder posted this. Traders bought 31.3 million equity put options contracts Monday, just shy of the all-time high set on Friday. Both days far surpassed the previous record of 26.7 million contracts set in February of 2020, which was the coronavirus crash. So now everyone is hedged. They're buying hedges in record amounts. And, everyone's panicked and fearful. And I'm basing that off of data that I'm seeing, not just like, oh, I checked my Twitter feed and I see a bunch of people that are bearish. No, that's like the worst way to gauge sentiment, to be perfectly honest. You always want to have metrics that you're tracking pretty much every day. And put to call ratio is definitely one that, I really like to track. So yeah, now that everyone is hedged into this Fed Wednesday, what could they really say that would surprise us? I honestly think, the odds, and it's always so obvious in hindsight. Like, let's say the market rallies into Friday, you would look back at this and be like, of course it rallied. Everyone was hedged and everyone bought puts. Why would it not? But in the here and now, it seems like impossible for the market to rally because the market's been on the back foot. But this to me is very contrarian bullish. And the other contrarian bullish thing that I see today is this right here, the squeeze metrics. The dark index came in at a 47 reading. So that is pretty nuts. Really what that means is dark pool buyers were aggressively buying into today's weakness ahead of Fed Wednesday. So yeah, heading into tomorrow, everyone knows that the Fed is going to do rate hikes. Those are actually priced into the yield curve. I know a lot of people don't really realize that gets priced in. And I'll show you where it's getting priced in. So let's go right here, market dashboards, global yields. And look at these 2-year Treasury yields. The 2-year Treasury yield is at 1%. The 2-year yield is a good indicator of what the market thinks the Fed is going to do in terms of rate hikes. So we basically have 4 hikes priced in here. So if the Fed says, hey guys, we're probably going to do rate hikes this year, the bond market already knows that. It's known that for a while. It's been pricing it in. So that really wouldn't be a surprise. The Fed has already said, hey, we're going to start rolling off the balance sheet once we're done with those Fed rate hikes. And I think that's what has made the market panic so much. So could this end up being one of those, sell the rumor, buy the news? I certainly think that it could. So yeah, those are really my thoughts heading into tomorrow's FOMC. Of course, we'll have to see how it goes. Let's take a look real quick. I'll just do the VIG Tech options race and then we'll break for today since this video is getting to be a bit long. But yeah, this market is just so exciting. And if you're managing your risk properly, you're not going all in, doing any of that degenerate stuff, there's going to be a great opportunity. When the market ends up forming a bottom. We don't know when it's going to be, but we're starting to get good indications that pretty much everyone is leaning on one side. So let's see. We have Tesla, 3.4 billion of flow, SPY. Yeah, these are pretty much the normal suspects. And let's take a look at this tradescape. I'm just going to click through a few of these pretty quick. So we got SPY. Pretty mixed bag, a lot of red on this screen. Yeah, so everyone, if you're buying puts for Fed Wednesday today, look at all these puts in SPX. Isn't this a little bit late to be buying puts, like after everything's already corrected so much? Who knows, maybe it just ends up being a tail event. The market really just cascades. I think at this point there's a good reason to think we could get a relief rally. I might be crazy though. Microsoft, a mixed bag. And Nvidia, yeah, also a mixed bag. That about does it for this market recap video. Hope you all had a great trading session, and I will see you all tomorrow.